Hey everyone, my name is Michael. I'm the founder and CEO of /dev.io, and we're going to be diving into some of the key stories in tech and startups that have been going on this week, along with my colleague Emmanuel. So let's dive into it. So first, we're going to cover Northvolt. So Northvolt, about a week ago or so, declared Chapter 11 bankruptcy protection. So, Chapter 11, just to give you a bit of background, I think we have some info on this, but Chapter 11 bankruptcy, it's not actually declaring bankruptcy. It's basically just protecting you from creditors so you can restructure and refinance, right? So, Northvolt is one of the premier battery manufacturers for Europe. It's a Swedish startup. Uh, Obviously, being in Sweden, we have a bit more unique perspective on this. So hopefully we can shed some light on what's going on here. But, interest rates going up, trouble with manufacturing, had to file bankruptcy protection, lots of pension funds involved in this, lots of public money going into this. So this was a hot story. So let's really look at kind of the history of Northvolt here. So founded in 2016, 2017, raised 12 million USD, basically trying to become, the founder and CEO was a former Tesla executive, right? So has experience in this space. And they wanted to make EV batteries, lithium ion batteries that could really fuel Europe's EV industry, and also expanded to some other places as well. So in 2018, they passed 100 employees, started Northvolt Labs, which I believe is over in Gothenburg on the west coast of Sweden, with Volvo in order to partner on EV batteries and research. 2019 surpassed 500 employees, continued to expand in 2020. 2021, partnered with Poland to do an energy storage play, purchased Cuberg in the US. They got a $14 billion order from Volkswagen. Haleftio, that's their main plant in the north of Sweden, right? So that's where a lot of the focus is, but really they've expanded their locations a lot. 4 or 5 different gigafactories, if I'm not wrong, Emmanuel, something like that.
Yeah, exactly. Yeah. And I
Yes, and
think, if,
then
if I'm not mistaken, I think there's a sixth one as well that they were planning on in Montreal. There's another one.
yeah, so they have one
Mhm.
in Montreal, Germany. They have one, uh, 2 locations in Sweden, if I'm not mistaken, for gigafactories. But a lot going on here for a company that's getting off the ground, right? So really swinging for the fences out of the gate. So yeah, 2023, more new products. This is all pre-production profitability, right? So expanding, big ambitions, lots of EU money, lots of Swedish public money, lots of government money, of course, from Canada and Germany going into these types of plants. So this is a big strategic bet for Europe, for Sweden. And yeah, so that was kind of the build up to this. And, my experience personally, um, being in Stockholm around 2018, 2019, seeing the early days of this, these guys were super hyped. They were one of the hottest places you could work for. They were branding themselves heavily, promoting themselves heavily, had a nice office in Stockholm. Um, it was kind of assumed they were going to knock it out of the park, was just the feeling from my perspective. Yeah, so that kind of brings us to the bankruptcy filing, right, in 2024. So June 2024. So kind of the straw that broke the camel's back, so to say, was losing a $2 billion BMW contract for their batteries, right? But essentially, they've been a few years behind on reaching their production targets. So this factory in Haleftio, they wanted to get to 51,000 cells by the end of 2024. I believe they were only around 10,000 or so. Do you have those numbers in front of you, Emmanuel, of what
I
the
don't.
capacity they reached was? Yeah, they
No,
were.
I
It
don't.
was 10 to 20,000. It was far below where they wanted to be. And I mean, to give them credit, this is a very hard industry, but of course, this coincides with interest rates going up. And when you're financing huge projects and interest rates go up, you're going to feel a squeeze, right? This is a whole different bet when interest rates are low. So, yeah, in November 2024, they had to file Chapter 11. And so I just kind of want to highlight the complexity of this, right? So, making batteries is very hard because you're competing against CATL, who controls like 80% of the market share, a Chinese company. You're actually taking these raw materials, putting together the battery with the anode and the cathode, and making sure that it functions properly, and then combining these into a pack. There's various different methods you can do this, whether cylindrical or rectangular packs, or I think there's even polygonal, kind of like a zigzag pattern you can go at as well. So, I'm not the expert here, but you can see it's a very competitive space. And particularly, what we've seen with a lot of Chinese manufacturers is they are elite at what they do. They have the whole supply chain for everything that goes into this. They have the supply chain, and they actually build the machines that do this, and they have the talent and the people there. So you have to build a whole ecosystem around this in order to compete. So, things I saw from analysts and what they had to say, uh, basically, I think this quote by the founder of the CEO of CATL really summarizes it. He's considered the battery king. And in a Financial Times article recently, he basically said they have the wrong design, the wrong process, and the wrong equipment. How can they scale up? So, a really brutal sentiment from the Battery King himself on where they're at. Um, Part of me feels like this just happens with mega projects, and they're still going to push forward with this, right? So, a few years late, Elon's been late on all of his projections, right? And he's the king of doing EVs with Tesla. So, this isn't necessarily too surprising for me with interest rates going up, but it is a bit concerning with the amount of plants that they created. So, Emmanuel, I know you had something from Peter Carlson that you read that you wanted to bring up here.
Yeah, exactly. So basically, I think I also partially agree with what he said, was that they should have pulled the brakes earlier, right, on expanding into all these different
Hmm.
countries. And I think I also see the mistake they did. I mean, you essentially see all these different plants here and there, these new projects starting in Germany, and now they're coming to a halt
Hmm.
without having really focused 100% in Skellefteå, basically. That is what he said. And I can clearly see also the pattern kind of within this downfall.
Hmm. Yeah. So, I mean, they're getting a lot of heat, obviously, on X and in the media right now. Due to this, Peter Carlson has stepped down as CEO, and they're going to reorganize. And, I am very much in favor of people taking big bets and building. There's going to be a lot of pushback because there's pension money involved, there's public money involved. So, that obviously makes it sting a bit more for the public when these projects don't go as expected. But I am optimistic, and I think this is a very important industry for the EU to continue to invest in, for Sweden to invest in. Sweden is an incredible country when it comes to making things in Sweden and having great industries. So this will just continue their legacy of doing that. Obviously, with these more advanced industries, you have to play on a bigger scale. So ultimately, I think this will get restructured. I think in a few years, hopefully, they'll get manufacturing up. The real question comes to like the fundamentals, like the first principles for me. Like, are you going to be able to keep electricity costs low enough to compete? Are you going to be able to get skilled labor and compete? You obviously have a huge union presence in Sweden. So, are you going to be able to get the efficiency out of your workforce to compete with a country like China? Really, this applies to nearly any industry that's competing with China, because you have to find a way to compete. You know, you might want to be nice and have unions. You might have, Germany, for instance, has a very hard time getting their cost of electricity down now without Russian gas. So how is that going to proceed where they can afford to really keep their industries building? But ultimately, I'm optimistic for what they'll be able to do, and hopefully, we can see Northvolt succeed in the future. So, yeah, just to wrap things up, like, why are people investing so much money in Northvolt? Well, look at CATL's revenue, and their profit is also excellent. So, I mean, look at how much their revenue is growing, and tell me if you think there's going to be more or less electrification in the next 5 years. And that answers the question for why this is a good investment, right? Cool. So that wraps up Northvolt. Let's take a look at MicroStrategy. MicroStrategy, a stock that is absolutely ripping. And we want to kind of talk a bit about how MicroStrategy works, why it trades at a premium to the amount of Bitcoin that they hold, and a little bit about their convertible debt. So, right now, MicroStrategy is trading at about, I want to say 2.3x, 2.39x their net asset value, which is the current value of their Bitcoin holdings, right? So, why would you pay 2.3x for MicroStrategy when you can just buy Bitcoin? Doesn't make a lot of sense, but the stock continues to rip. So, what does MicroStrategy do? Well, MicroStrategy basically issues convertible debt in order to buy more Bitcoin. So, Michael Saylor, the CEO of MicroStrategy, is one of the biggest Bitcoin advocates out there. And what they do is they continually issue more and more Bitcoin. So here you can see all the different points at which MicroStrategy has purchased more Bitcoin. So they purchase at the bottom, they purchase at the tops, they purchase on the way up, on the way down. They're always purchasing more Bitcoin. And so let's really dive into, like, what is this convertible debt? I'll try to explain this to you the best I can. We will also share on our social media some resources about this and really what's happening here. This video gives a great overview of really what's going on. But at its core, if we look at from 2023 to 2024, MicroStrategy's total Bitcoin went up 33.3%, and its total shares went up 13.2%. So that makes a lot of sense. You issue 13% more shares and you get 33.3% more Bitcoin. That's an awesome deal. Just keep issuing more shares and increase your Bitcoin per share. And that's essentially what they're able to do. So the convertible debt that MicroStrategy is issuing is basically, a big part of this market, I should say, is that the people investing in this convertible debt often have a mandate that they can't purchase Bitcoin itself. So they might be a bond fund and they can only invest in debt, right? So they can't actually get direct exposure to Bitcoin, but through the purchase of a MicroStrategy convertible bond, they are able to get upside. So MicroStrategy is at 388. Where is it at? 407, it looks like. 408 today. So what MicroStrategy would do is then issue a convertible bond at, let's say, 450 a share. So if their stock goes to 450, that debt holder can convert their bond into shares, right? And so they're able to then participate in that upside. There's a lot more going on here. There's some other resources we're going to share on how those convertible debt investors think and how they hedge that bet as they go to really make sure that they're capturing their gains. But normally with a bond, let's say you can get like 5, 6, 7, 8% that you're going to make on that bond. So this gives you the opportunity to have more upside, assuming the stock goes up, right? And the interesting thing to me about this that I learned from this video, particularly, basically, if we look at their capital raise plan, you can see that MicroStrategy is planning on raising bigger and bigger chunks of capital through equity and fixed income convertible bond issuances. And so fundamentally, like, why does it make sense that they can issue more stock and their Bitcoin per share continues to go up? Well, basically, every time a new convertible buyer comes in, they are the one financing the increase in convertible in Bitcoin per share for all the older investors. So it has some similarities to a traditional pyramid scheme where the newest level pays the first investors, right? So, but the difference here, really, from my perspective with MicroStrategy, is this is not like some pyramid scheme where they're selling like makeup or something. They're selling the ability to have the upside of Bitcoin, and they're a huge holder of Bitcoin. And Bitcoin is not the most liquid asset. So there's other analysts out there who basically said nearly no company, no publicly traded company could even catch the amount of Bitcoin that MicroStrategy has, because as they buy, the price goes up. So I think only Meta was considered to have the cash to be able to really go after this strategy and do it, according to one analyst I looked at. Of course, others like Berkshire, Apple have a ton of cash. They're not going to go after this because they don't have the founder-led nature. Really, you need like a founder who's going to commit to this. You're not going to get a board to greenlight this, right? So yeah, that gives you a little bit of overview on what's going on with MicroStrategy. Obviously, it's basically become a levered Bitcoin holding. So you can hold MicroStrategy and get 2, 3, 4, 5x returns that you're going to get on your Bitcoin. So, ultimately, none of this is investment advice, obviously. Buy low, sell high, right? So, yeah, that's the basics on MicroStrategy. We'll share some resources also if you're more interested. And ultimately, why are people investing in this? I think people want retail investors know it's going to trade like a leveraged Bitcoin ETF, so to say, and there's enough demand on the convertible debt side. Also, as MicroStrategy gets bigger, they actually will create a market for credit default swaps, which will increase their ability to raise convertible debt. So I don't think this cycle is anywhere close to being over. All right, cool. Yeah, so now let's cover the University of Austin, Texas X. So this is a really cool development. 60 Minutes recently aired an episode highlighting this school and their new model. Basically, obviously, the last few years, US universities, particularly elite universities with high tuition, have really been hyper politicized, and all of these campouts where they're just protesting, blocking buildings, and you've also seen the deterioration of quality metrics and how they admit students. So, no longer caring about SAT scores, no longer really caring about how students perform on tests. And you're starting to see this turn where enough investors in the business community have really said, like, this is enough. So prominent entrepreneurs, investors like Bill Ackman is one of the backers of this university. And they're getting students in the top 92nd percentile of SAT scores. above that. So just the very top percent of SAT scores, and a variety of students in terms of their beliefs. So they have both left leaning and right leaning students, and they support debate and uh, respectful conversation about issues in order to seek the truth. Say anything, shout nothing is their philosophy. And they're moving on from DEI and moving towards MEI, merit, excellence, and intelligence. So to me, this was a very interesting story. Emmanuel, what did you think about this from your perspective?
I mean, yeah, it was quite interesting, and I mean, if you weigh kind of both sides as well, I mean, it kind of makes sense that we're going back now to this way of teaching, because I remember seeing a couple comments about, or having a couple opinions about this, where people were kind of agreeing with this move, saying, yeah, let's go back to how it used to be. But I think it might be a mixture. We're not just going back in time and forgetting whatever happened in the timeline
Yeah,
until now. We're kind of bringing both together, right? We have learned from what we know now, and we're kind of trying to now mix these two things together in order to basically create the education that matters most. Yeah.
exactly. Exactly. And I think particularly in the US, you have much more of a problem of inflating tuition costs where 50, 60, 70, 80, $100,000 a year for tuition at some of these universities. Many prominent universities have more administrators than they have students, and so the bloat is incredible, and it's not focused on really producing the most qualified skilled workforce that we need. And if the US particularly wants to be competitive, if we want to build the future, then people should be camped out in their garage building a startup, not camped out on campus protesting whatever today's issue is. Of course, you should have freedom of speech to do that, but I think the pendulum obviously swung too far, and you see a lot of young people at UTAX really embracing this and embracing uh, a school that's focused more on excellence. So they're not wasting extra money on things. The students have minimal. They actually rent their own apartments. There's not all this excess spending. It's really focused on creating great builders of the future. So super exciting to see this. Hopefully, we see more of this moving forward. All right, so now we're going to touch on global hiring. So let's talk about Poland and why it is such a popular place to build. Poland is absolutely booming, uh, outpacing uh, outpacing the EU, outpacing even the US GDP growth. A vibrant tech community, companies like Microsoft, Google, etc., having major presences in Poland. Obviously, Poland is in the EU, which gives you both security, less corruption, ease of doing business. And the Polish people are incredible engineers and renowned for their engineering skills as well. So if we look at some of the metrics we consider at slash dev when we're hiring engineers, right? The first thing is you're wanting to get a good value for your engineer, right? So in Poland, you're going to be paying about 28 to $50 an hour for a senior engineer, which is a great value compared to if you're trying to hire an engineer in San Francisco or New York, right? Or most US cities when you're looking for a senior engineer. So you can really get quite good value. I would not put this in the great value bucket, but if your focus is on really high skill individuals, and if you're a more mid, large size company that wants to have an office, then Poland is a very attractive country to target with cities like Warsaw, Krakow, that can be great places to build an office and to have a team. Also, the European time zone works quite well with the US. You're going to be a bit ahead. Uh, is Poland on CET, so they're probably 9 hours ahead of the West Coast, 6 hours ahead of the East Coast, something along those lines. Great English speaking. We're looking at about 400,000 or more software developers in Poland, so a really big pool of talent. I would say, some of the main challenges with Poland, first off, if you're a smaller company or if you're really good at global hiring, you're not quite going to get the value of bang for your buck hiring in Poland. It's just a bit more expensive. So, like I said, this is more tailored towards larger companies who really want to build an office, maybe have some specialist skill sets they're trying to work with. So you're not going to get nearly the value that we get out of, let's say, Brazil, where we find lots of great engineers. Um, Political and economic risks, obviously, like the big question, I would say, would only really be Russia, being that Poland is close to Russia. But I'm optimistic that that political risk is going to calm down in the next 4 years, and we're not going to have to worry about that so much. Um, and as with most tech hubs, you do see a lot of the very best talent leaving Poland for higher paying opportunities in other countries. So you will suffer from some of that. So ultimately, like if you're a smaller company, I think there's better places you can find talent. But if you're a mid or large company looking to really build an office with some high agency, highly skilled engineers, Poland is a great choice for you. Awesome. Cool. So let's dive into some software engineering mastery concepts, right? So let's see. This week we quickly want to touch on how much AI and these tools are changing the way we work at Slash Dev and changing the way that software engineers work. So Google CEO recently said that more than a quarter of their code is now being generated by AI. And when we look at Microsoft, they expected AI could generate up to 180 billion USD in productivity gains by 2030. And we also see AI Business saying that over 1 million developers have used GitHub Copilot. Okay, cool. So objectively, myself building software and our team at SlashDev, this is a game changer. We use Claude, ChatGPT, specifically, those are our go-tos every single day, always when we are programming. It easily it can easily make you 4, 5, 6 times more effective, especially in a language that you aren't as versed in. You used to really need to have to know the syntax of a language up front to be able to be productive in it. Now, if you know the architecture of how this language should be built, like let's say Laravel, for instance, you need to have your model, your controller, your migrations. Maybe you want to have your requests, you want to have your API file, and then you've really got a highly functioning API built on top of a framework that can scale into a large app. So it just makes it so much faster to roll out features, both on the back end and the front end. And I really see this continuing to pick up. This is going to allow smaller founding teams to be much more effective and to build apps and bring products to market. This is going to allow companies to build out SaaS tools that they use and pay for internally so that they no longer need to pay for them, so that they can build and customize them themselves. And this is just going to lead to even more software development. So I'm super bullish on these tools and love working with them every day. It also, one of my favorite things is this increases your speed of learning. You get your questions answered so fast. You can understand different architectures for how to build. You can ask detailed questions about a function and how to make it more effective. And it doesn't have to be 100% correct. You can debug it and test it and get it to be working properly. So yeah, that's my 2 cents on AI tools. Emmanuel, I don't know if you have any thoughts here.
Well, and not much, but I think back when I used to program as well, mainly front end development, and I was learning all these different types of frameworks in JavaScript, such as GSAP, Green Stack Animation Platform. It was I remember starting out and I was like, okay, it took me a couple of weeks to get used to it. And now I'm hearing people that have just started with it and they're like, yeah, I'm already hitting out my first two projects, three projects, and they're looking
Exactly.
clean as well. And then you wonder like, how has this developed so quickly? And yeah, with the help of these AI tools, I think it's pretty possible that you can learn languages nowadays much more quicker, or not necessarily languages, but I guess just as you mentioned, you just have to get like a grasp of maybe like syntax or maybe the architecture behind it, and the rest basically builds itself.
Yeah, I think it's like a paradigm shift in where humans provide value and where we focus. Like, we're not so focused on HTML anymore. We're not so focused on FTP, TCP, HTTP. All these frameworks cover this for us for the most part. It's important to learn the fundamentals, but at the end of the day, you're trying to build something, right? And now the focus really shifts in terms of what you're focused on. So,
Mhm.
one thing I notice is like you still need to know how to build something correctly because you can still build a giant spaghetti code application that's really annoying to maintain if you don't know what you're doing. But if you know what you're doing, you can build things better than ever. So, yeah, great development and excited to continue to see the progress of these. So, now let's do a little summary of one of the Bibles of software development, the Pragmatic Programmer. So, I want to run through some of my key takeaways from this book and really things that in running slash dev, in building hundreds of different apps and software systems, what lessons from this book have really been powerful for me at this stage. I would say there's some other lessons that might be more interesting if you're just getting started with programming, but then, I encourage you to pick up this book and check it out yourself. So, the first thing I want to highlight is it's important to invest in yourself. And this is more important than ever, as we touched on before this about these AI tools increasing the speed of learning. I really feel the high agency, uh, the most productive individuals in society are getting smarter than ever and learning faster than ever. So you need to invest in yourself, learn front end, learn back end, learn app development, learn deployment, understand marketing and the business model, understand the use cases, understand how to automate things, just keep learning relentlessly. The second point I would say is adaptability. So this has to do with embracing change and adopting modern best practices to build software. So, staying up to date on the best way to build without overdoing it. You don't need to chase every hot framework. You certainly do not need to over engineer things and build microservices when literally no one needs that but Netflix, even though I constantly have clients who want to build with microservices and could just have a traditional API that would function much better. Fun story on this. I actually talked to an engineer at SVT, one of the major Swedish streaming companies and TV companies, and they went towards microservices and rolled it back because it's not needed, even for them. So if you're a startup, you don't need microservices. Third, I would say testing is really important. So as you get towards bigger applications, you'll understand that automated tests to make sure that your app is reliable and still working. If you've built on top of a large code base, you know that changing something somewhere could potentially break something somewhere else that you're not expecting it. So it's really important that you have unit tests and UI tests to make sure that nothing is breaking. Then I would say iterative development. So building in small, manageable chunks. This is really important. Often clients come to us and they want to build a mega app and they want to know an estimate on this mega app and they want to plan it all out. And I really encourage them, like, let's break this down to, we can have that vision, but what do you want to get done in 2 weeks? What do you want to get done in 2 months, in 4 months? Let's make sure we have a realistic understanding of what we're trying to build. That's really important. Building a rapid prototype of the feature you want to build to make sure it's technically feasible and it makes sense makes a lot more sense than building the most perfect back end or front end on your way towards that. And this kind of ties into a concept that's really important when you're working with clients or even managing your own career. guarding against overcommitment. So non-technical people, non-technical clients, they often want a quote on a massive app, or they want a huge feature built and they want it built yesterday. And it is your job, even though you're a software engineer, to communicate the complexity of your work and how long things will take. So you should not be giving estimates or quotes on 6-month, 12-month apps. You can give ballparks on what you expect, but you need to communicate that these things change and there will be unexpected challenges that arise. You can be much more accurate in how long something's going to take for you to build in a week or two. But when you start trying to commit to things that are bigger, full apps that will take a year plus, the estimates are so far off. And, this is coming from David Thomas and Andrew Hunt telling you, do not commit to this. So the best in the business do not commit to these unrealistic expectations or overcommitment. And you need to make sure you do that as well. So those are the main takeaways I would take away from the pragmatic programmer, from my experience at SlashDev, and hopefully some valuable insights that you can use as a software developer or building software projects for clients yourself. All right, cool. So finally, let's touch on the Mark Andreessen episode of Joe Rogan from this week. This was a super trending topic on X, where we had a lot of discussion about some of the topics that Mark Andreessen was going through. So specifically, obviously, being that the US election just happened, this was a lot about some of the challenges building companies and startups with the previous administration and some of the things that we're expecting for the next 4 years. So obviously, the Department of Government Efficiency was talked about and some of the plans there, some interesting insights. Something like a half of government workers in the US are still working from home after COVID. And so, that's just one of the many, many facts that has come out in the last few weeks about the wasteful spending of the US government. The Pentagon has failed their audits, something like 5 times in a row. And the American people want more transparency and more accountability on where their tax dollars are going. So, they were really excited about that and what can happen there. There's a lot that can be focused on to improve government spending and really get this US debt spiral under control. If you are interested in finance or economics, you might know Ray Dalio and understand his concepts of why nations fail, and studying, the Dutch and the British, who were global reserve currencies of their time, and both ended up losing their dominance in the market due to debt and debt burdens that they ultimately could not get under control. So if the US wants to be able to maintain its position, it has to make sure that it gets this under control. According to Dalio, the US has the highest debt burden in the world. Obviously, when you are the reserve currency, you are taking out loans in your currency. So you could just print more money and pay it off in your currency. But that creates runaway inflation, which is exactly what we experienced from all the COVID spending we did and exactly what we don't want to do. So we're going to go towards more austerity measures, it looks like, and get this spending under control. Something interesting I also saw on X, someone was saying government waste is not the main issue. Billionaires paying tax is the issue. Well, Jeff Bezos is worth about 217 billion. And if you took all of his money from him and gave it to the government as tax, the government would spend that money in 12.8 days. So I think there's bigger problems than taxing billionaires. And I think we need to get this spending under control. So that was something that was highlighted that I thought was, for me, the background in finance and understanding how these things work. To some extent, I think that's one of the top issues that hopefully we can get resolved. Some other interesting points, I would say, from a tech angle, you really heard about the adversity that the crypto and drone industry were facing. So anyone who's into crypto knows that Gary Gensler is famously disliked. He's chairman of the SEC, stepped down recently, if I'm not mistaken, and he was basically gunning for crypto to shut down the crypto industry. So Mark Andreessen, he runs one of the biggest venture capital firms in the world. If anyone has insight into what America needs to do to build better companies, he's going to be one of the guys I would listen to. And he said that many of these companies were having their founders being debanked. So obviously, the government doesn't have any legal standing to debank founders for building crypto companies. But what is happening in these cases is agencies funded by the government are applying pressure on these banks to debank these individuals who are in the crypto industry. And essentially make it impossible for them to build their company. So yeah, move on, do something else. You cannot build a blockchain company to do whatever you want to do. You have to move to a different country to do it or change careers. And this is very concerning because if you want to have a country that has jobs and has a strong middle class, you have to win in the global economy. You have to be able to have these industries like crypto be successful in the United States. Same goes for the EU and what we talked about with Northvolt earlier, making sure they can compete. And so that was very concerning to me. And it's actually quite unethical. I think if there's no law saying that you can't build these types of companies, why are agencies applying pressure to debank individuals? It's not, it's basically, according to Mark Andreessen, he believes that according to several legal statutes, it is illegal what some of these agencies were doing, and there could be liability for some individuals. So we will see. Hopefully, we don't see. We don't want to see any weaponization of the legal system. We want to get rid of that, but we have to make it more competitive for companies to build. And this brings me to the last main point I would really make from this. Also, is he highlighted his experience in the drone industry. So if you look at drones are basically every military in the world is changing their view on how warfare is going to work, and drones are going to be the future of warfare. And what happened to the U.S. drone industry is the U.S. regulators basically said that a drone cannot be flown out of your line of sight. So you have to be able to see that drone. And if you're a U.S. drone manufacturer, you have to make a fail-safe so that they can't fly out of sight. Whereas, since the US has a relatively open market, you can still buy a Chinese drone that doesn't have that. So this basically killed the ability for US companies to compete in drone manufacturing, which now has made DJI one of the main drone industries in the world. Not the only reason. China's incredibly competitive, so they would be competing no matter what. But why put up any blockers to your own industry if it's not something dangerous that should actually be regulated? So this was a big concern for me and something that we have to focus on. We have to make it more competitive to build the future in Western countries. We cannot make it harder to build the next generation of great companies. We have to make it easier to build the next generation of great companies. And this kind of goes along with another episode, another great podcast I listened to recently by Javier Milei, the president of Argentina, who has really turned around the economy of Argentina by making it a more free market focused and relentlessly cutting regulations in Argentina. So Argentina used to be I believe, seventh most. Let me get this right. So yeah, in the early 20th century, Argentina was among the world's most prosperous nations. In 1908, its per capita income was seventh globally. Argentina was seventh globally. And they basically had poor policies that led them to a downfall, to a debt spiral, and to runaway inflation. And now the Argentina economy is actually in a surplus. Investors are flocking back to Argentina, and it looks like the turnaround story of the century in terms of countries we're seeing. So this is just another example of how we have to have regulations that make sense, But we can't be like California and spend billions of dollars to not lay a single railroad track for a project. We have to be able to build these mega projects in Western countries. So, yeah, those are my main takeaways. Emmanuel, I don't know if you have any thoughts on those things, but really interesting content this week, I think.
Yeah, I mean, like specifically to this one that you just they just talked about, the Joe Rogan and Mark Andreessen podcast. I haven't been able to watch it yet. That's definitely on my bucket list for this week. But no, it's very interesting, especially the drone topic that you highlighted that they discussed as well. It's quite interesting how they kind of shot themselves in their own leg, kind of yeah by blocking their competitiveness.
Yep.
Yeah,
Yep. Exactly. Now, this is a really interesting topic. And even to a topic we brought up earlier, the Department of Government Efficiency, the US defense industry is basically controlled by, I believe it's five prime vendors that get most of the contracts. So if you want to be able to have more innovation, you have to have more startups in the game and you have to make it easier for them to do business. So, whether this is drones or really any industry, health tech, things like stem cells have a lot of potential. There's a lot of advancement in how different psychedelics can help with PTSD. There's robotics. We have to have these supply chains. We have to really try to compete. And, we have a lot of hungry individuals in the West who want to build. Let's make it easy for them to build at the end of the day. So, yeah, that's our takeaways for this week. I hope you enjoyed this episode, and we'll be back next week with more hot topics for you. So, yeah, thanks for listening, and it's time to get back to building. Cheers.